안녕하세요. IOSG Ventures Consumer Investment Team 담당하는 조이라고 합니다. So I'll switch to English for now, but just saying hello and welcome to our old friends reunion. I want to take some time to present part of our thesis, how we see the broader crypto space going, and also kind of why we're on the bullish side for venture as a whole. Let's see. Okay, cool. Yeah, so I think at this point, like crypto has seen a lot of actual influence from different macro trends. One big trend that we see is the activity of money debasement, and this is not to say inflation is essentially money debasement, but I think we should definitely keep this into account when we're actually looking at returns, because it just means that when you're holding the dollar, your relative dollar actual spending power is smaller. I think M2 is a good debasement standard. Other practitioners use something else, but I think this is a decent proxy that we can look at. And there's small nuances, like we don't realize all inflation. With more kind of money printed, we see better productivity, increase in productivity in goods. But regardless, something that we notice is that the S&P is actually a negative return when you're actually taking into consideration this money debasement since 2000. And this is not the best argument in all cases, but I think this is a really good argument to kind of show the general thesis of Bitcoin. I think this is a very core driver since the inception, and big part of it is the lack of trust in the financial system. If we see some sort of addiction to money printing that we see today, I think this is a big bullish case that's driving actual Bitcoin adoption. Some other tailwinds, I guess, that we've seen in this cycle is some more geopolitical factors that come into play, for example, tariffs, gold just being priced higher, Bitcoin being kind of this idea of digital gold, dollar weaponization, and search for dollar alternatives. And these are kind of the big factors that we're pushing for Bitcoin this cycle primarily. And I guess this is super big picture. I don't think a lot of people look at a picture this big in crypto nowadays, but ever since World War I, we see that we see a flattening out of the dollar dominance, and you can kind of see how there's a bigger emphasis on alternative assets, and gold is also benefiting from this on the bottom side here. And this is kind of showing how the dollar is actually quite desperate, and it should recognize some other assets, especially since these are growing and as part of the financial strategy. Initially, talking about the different concepts of some of the main drivers of the cycle, we see Bitcoin, which is initially eCash and blockchain, 2009, 2008, very early days, it was just a white paper, and it got more adoption as a store of value in digital gold. And we see Ethereum, which is programmable money, in back in the day, you kind of now have this really big design space of a Turing-complete blockchain where you're able to program money directly into smart contracts. Now we see this more as a digital oil powering all of DeFi economy, essentially. A very large chunk of it lives on ETH, and stablecoins as well, digital dollar. But I think a really big case for stablecoins is also lives with very quick money transfers. So initially, you have the case of people wanting to hedge their local currencies and stuff like that. But we've also seen a really big growth in people without proper bank structures being able to have money transfers as fast as the internet will allow you to do it. And obviously we have DeFi, which is just just the recreation of the financial primitive, just built completely on chain. This is just to say, like, gold has, you know, like millennials of exposure that we've seen, but Bitcoin was able to capture like 10% of this market cap within 15 years. I think there's like a clear growth trajectory if you like really zoom out. And we do expect stablecoins to really have a big part in this upcoming future as, you know, DeFi gets more mature, and versus like the M2 money supply, we see it only has 1%. So this is a big part of our thesis, and where we expect the crypto landscape to grow as well. And I guess like another tailwind that we've talked about is kind of this idea of like wealth distribution. So based strictly on demographic trends, we don't see that it's difficult for Bitcoin to keep challenging gold, right? Like, people are getting younger and wealth is getting distributed more down. As a result, I think we'll see a lot of this Gen Z millennials kind of audience being more privy to this kind of asset, and more privy and open to this kind of primitive of finance. So yeah, I guess like one thing to bring up here is the path towards $2 trillion in stablecoins. And if you see here that we see that the stablecoins have become the largest financier of the U.S. government. So this kind of means that whenever you mint like USDT or USDC, like a big chunk of this goes back to U.S. treasuries for more sustainable yield, and this is how they generate revenue. Obviously, some of this revenue goes back to Bitcoin, etc., power grids in Africa or whatnot. But yeah, I think stablecoins are being very like pushed by the U.S. government, just because how big of a reserve that it holds of U.S. treasuries, and I think as a result, like the regulations show that the U.S. recognizes it as a strategic investment. Yeah, so like Ethereum holds like a very big chunk of stablecoins. I think Tron also definitely generated its own niche market. You can look at like Southeast Asia, you can look at like Latin America, some parts of Africa. They use stablecoins for remittance, mobile top-ups, etc. Like even like e-commerce, I think there's an entire bank structure that is very dependent on this, and you know, $80 billion of USDT living on Tron. But regardless, like I think like the real like opening gateway to like actually unlocking what stables can really do, like it is definitely within DeFi as well. So the general thesis for something like Ethereum stablecoins is like why would you be giving like just minting USDT when you can get the same dollar value and actually accrue yield to it, etc. I think there's very like interesting things that you can do to it. And I guess like shout out to Athena here as well. Like I feel like it's kind of cemented in like a DeFi like landscape as like the on-chain savings account, and I think that's like been a really interesting primitive that came out of stablecoins. Yeah, and I guess also this is the last tailwind, but also private enterprise. I feel like have always been talking about how they'll become super apps. Like I don't know, Meta for a very long time have been kind of pushing for this super app like Thesis, and the one thing that they're missing is like proper financial rails. Now, like with stables or just with on-chain finance and just everything just being really composable, now this is super possible. And the likes of Robinhood, they're just also building. For those of you that don't know about the L1, they're building like their own chain to allow like Europeans to trade 24/7. I think there's like very interesting DeFi primitives that now like these Web2 companies or Web2 like tech stacks have been adopting. And you know, the former definitely introduces a very significant portion of new users. Like 99% of countries are on Meta, X, whatever social media that you see, and these guys are heavily incentivized to actually push for the adoption of stablecoins natively on this platform, and while Robinhood is allowing for net new assets as well. And I guess this is like very, very basic that you see on kind of like every slide going forward. You see how every single new primitive that comes out digitally, like you see a very strong use case for finance, right? So you have like mainframe, VC, networking, desktop internet, mobile internet, cloud SaaS, blockchain, crypto. So with blockchain and crypto, you see like stablecoins, DeFi, tokenization technology, and now you're able to make any like fintech or any technology into something that resembles more fintech, and this is kind of what we're investing towards and where we would like to see the space to go as well. So this is just also what you see a lot on crypto Twitter if you guys are active here, but you have these halving events that amplify Bitcoin's growth, right? And it's very weird because we don't know like whether this is causation, but like typically S&P returns like the year after or the year of are like in double digits. I think typically it goes very, very crazy, and whether this is because consumers feel more risk on, like after making a bag on the S&P, or consumers are just generally the macro trends just have been pouring more capital into the market, and there's better market capitalization. But this is a clear like 4-year trend that we've seen, which has amplified Bitcoin's growth pretty consistently throughout its life. And what's really, really interesting, like in the 2018 Powell pivot, it was like this period of time when Powell was like, we're gonna hike up interest rates no matter what, and people thought this guy was off the rails. So in 2018, 21, 22, like you see Bitcoin dropping like more than double that of like just the Nasdaq, and very significantly compared to the gold. But you can see over time that in the 2025 tariff scare, which is very recently, it somewhat resembles the drop of the Nasdaq. So it's not like a leverage bet on the TradFi stock market anymore. It's actually very covered downside, and the upside that we've seen, like the cycle has been like tremendous. I feel like, and one thing that's kind of driving this is also like DAT companies like MicroStrategy, since 2020, 2021, have been accumulating this Bitcoin treasury and actually trying to prune this thesis out. But I think through the lens of I guess like the Trump era, there's like some semblance of like ownership and some kind of semblance of like company dominance that we see, and as a result, we see that the U.S. have accumulated a very significant position in Bitcoin, and also ETH as well. Like you see, with something like ETH, like you're basically powering a lot of the DeFi that exists on chain. Stablecoins directly go to financing the U.S. treasuries. Like I think it's a very easy bet for the U.S. government to try to push certain regulations or certain companies to be accumulating more of these assets. Obviously, I think China was very early to like the mining era. It was very early to like just on-chain activity in general. So we see China as like an interesting contender here too. But I think there's like a very, very big disparity between like corporate and government like holdings. So now going more into us specifically what we see in venture, kind of why we're doing what we're doing. In 2021, we saw like the previous cycle, like there was a lot of capital and people were just kind of putting money into projects because there was like this overhyped dream of like, oh, this is the next future of finance. But I don't think the crypto space was mature enough to actually absorb this, and therefore the bubble bursted. Now I think the real opportunity is still there. Like we have the same thesis, like we're kind of imagining basically all of finance to exist and live on chain, and the capital willing to deploy at this point is now become a more contrarian bet. Like you see a lot of funds either die out or stop deploying, handle more liquid stuff, but then I think this is really where we have a conviction, and nothing that much changed for us to actually give up this conviction of the opportunity we see within blockchain. And even if on-chain activity like crypto market cap doesn't grow at all, this is still like a $1 trillion opportunity. Like we're looking for these either like long tail long tail altcoins, we're looking for like other assets that's not like super blue chip, and even then, like I think this is a pretty big pie that now has a lot less competition, and this is kind of what we're gunning for. And something that's really, really interesting actually is that only 10% of retail capital actually holds Bitcoin. I think this, to us, we interpret it as now a lot of people that are flowing liquidity into the market are more, chasing newer narratives, very like risk on, and it's kind of what we're targeting in terms of returns. Like, of course, we can bet on these RWA products and institutions, but this organic flow and actual users is kind of what drives the growth that we see. And contrary to like popular belief, I feel like a lot of these like crypto companies have produced like significant like unicorns, right? Like I think Tether having 93 million revenue per employee and Hyperliquid doing 102 significantly outpaces anything else. So we see like the very obvious like asymmetric upside with investing into Web3 companies. And obviously there's also power law in crypto valuations. So there's around like 100-ish unicorns in crypto already, and a couple of these are over 100 billion valuation. But regardless, like there is like a very significant churning of the top projects in crypto. As you stated before, like this activity of being risk on and cycling through different assets and the users having the autonomy to really believe in what to invest in, I think is the opportunity that we're seeking. And this is kind of where it makes sense for a venture fund to be very, very dynamic. I think this passive index style investing doesn't make that much sense, especially given the dynamic nature of our space and kind of how liquidity flows in and out. We are kind of poised to find and identify the next big thing, the next big narrative, and a real product that actually aims to like help people and actually gain the revenue that we looked at before. I guess there is some survivorship bias to other venture funds, but we have survived 3 bear markets, some very grueling ones at that, and typically we're pretty contrarian bets. I think something that we do really well is not do this like kind of idea of like FOMO investing and be very patient and deploy more in bear markets and try to exit in bull markets. As I said before, we are quite dynamic, and if there's a good opportunity that happens in the bull market, always happy to deploy. But I think this is really like where we see the big opportunity in crypto and kind of being patient, because we're in it for like the longer term play. I think this approach has done really well for our fund. Previous fund, DPI, was 8.2, and all of us like on the IC team, all of us on the IOSG team have skin in the game, whether we're trading, we're holding spot, we're degenning on perps, we're farming DeFi. I think that makes a really big difference because the fact that you're able to see the different activity and track gives you an insight into what could be nice, what would I want to see. I'm based in New York. We have a bunch of team members in Shenzhen, Hong Kong, from all around the world, Vancouver, etc. So this also gives us access to global opportunities, access to Asian entrepreneurs, access to Asian resources, and we're situated as the best Greater China partner for non-Asians. But all of this included, I think like we do try to focus as much as we can on being kind of like research driven, because I feel like that's not super like common, especially in a bull market, but it's always good to stay disciplined and try to actually figure out what's going on rather than following the signal. So this is kind of a few companies that we've invested into that we're quite proud of. And it shows like throughout the cycles we've been able to kind of pinpoint exactly where we thought the space was going, from infra, DeFi, modular thesis, restaking, the flat protocol thesis, and etc. I think a big part of kind of surviving through these cycles is that you make really great partners along the way, whether it's founders, communities, exchanges, other VCs, these people that I feel like crypto space being as small as it is, like it is a blessing to be able to kind of establish relationships with people that you think are smart, kind of have that conviction and kind of grow with them through that. And this is what I feel like we do best in doing, both in the Asia side and the Western side as well. Our evaluation process is typically just backing resilient, high execution teams to find product market fit. Like we want to find people that actually build what users want, because at the end of the day, I think serving users is a bigger play than just playing like a different game altogether for returns, etc. Supporting strong market opportunities led by capable but average teams is also, I think, very valuable in this space. And an extensive industry mapping and selecting top 3 to 4 players within each sector. So something that we like to do is try to understand everything before pretending like you understand everything. Just beyond capital, like from a venture capital perspective, like we do try to add like other values as well. And this is kind of like a little mapping that we made of what we've been able to help some of our portfolios with. So whether it's like content creation, fundraising strategy, listing support, marketing, data analytics, liquidity provision, or running even our own validator nodes, I feel like this has been proven to be very helpful to our portfolio so far. And this is something that we will continue to do. I think our IR team have been working day and night for whatever we need to help our portfolio succeed. So very proud of this. And if you want some testimonies, they're on the board. I'm not going to read every single one of them, but here they are. And yeah, I'll quickly go through 4 of the things that we're very bullish on. One is stablecoins payment and RWA systems. Next one being AI crypto. And third one being DePIN. And I should not say DePIN, I should say consumer, but our 4th one being consumer. We have a member on the IC team that specializes in each of these. I think we like to keep quite verticalized just to get like a eagle eye view of the whole space. So if you want to talk to us, we'll be around the event. And I think yeah. So that is the end of the keynote, but thank you everyone for listening. I hope you enjoy the rest of the panels. We have some great people coming on, some that I mentioned here, but yeah, thank you everybody.